It is Wednesday, May 13th. Welcome to the report. The title today, Momentum is Waning. So we are 217 days from Bitcoin highs, but who's counting? The winds seem to have changed though, Mike. We locked in a weekly close, and this is a big deal, above Bitcoin's short-term holder cost basis.
Yep.
I know that's something that you watch on a week-to-week basis. And if we lock in a few more, that could mean the end of the bear market. That's what's happened previously. Also, we have fear and greed back to neutral territory. Altcoins have been showing some life. What does all this mean? Your title is still Momentum is Waning, so
Right.
we can kind of guess your conclusion here. We're going to dig into the short-term holder cost numbers on Bitcoin, compare that to previous cycles. Also, talk about possible catalysts for a regime shift and a next leg up or down. And how has the month of June historically gone for Bitcoin price? You talk about that in today's report. Stick around to the end as usual, guys. There's 3 price levels that Mike is watching and some more details on the portfolio. There were some buys, there were some sells this week for TDR Pro members. I want to talk a little bit about how you're thinking about this market. Okay, so the bullish setup here that we have, that people are seeing, fear and greed neutral, short-term holder cost basis. We're above that right now on Bitcoin price. Yet, your title is still Momentum is Waning. So which is it? Are we in a bullish setup or is momentum waning?
That's a $1 million question right there. I think, this rally has lasted longer than, we were anticipating. We talked about this last week. Bear market rallies typically last, 2 months or so. And we're now 3+ months into this latest move, which ended, which progressed into a weekly close last week above short-term holder cost basis. As we talked last week about the 200-day moving average as potential resistance. We haven't quite gotten up to the 200-day moving average, but we did have that close, that first weekly close above the short-term holder cost basis. So that's important, right? That's interesting. We should understand when were there other periods where this has played out in past bear markets. What was the market structure at those times? How far into the bear market was it? So we can kind of go through some of that today and kind of come back to like cycle awareness, where are we at? And also, are people starting to sell, right? As we push into those low 80s, are we seeing sellers come back into the market? And that's some of what we're going to get into today.
Yeah, I think you've got some compelling evidence here today that momentum is waning. Before we get into it, though, got to thank our friends and sponsors over at Galaxy. This one's for the institutional capital listening, whether you're looking at the future of finance, of course, that is crypto, or the backbone of the next industrial revolution, that is AI. Galaxy, that's the name you need to know. They've established themselves as a global leader, not just in digital assets and crypto, but also in data center infrastructure, the type of infrastructure that's powering AI. What's unique about Galaxy is they do both, not just crypto, not just AI, but both. They have an HPC-ready data center, including their Helios site. This is 1.6 gigawatts of approved power. They're a publicly traded company. GLXY is the ticker. And so if you're an institution, you're looking for things on the AI side, you're looking for crypto trading, custody, and tokenization, go check them out. There's a link in the show notes. All right, Mike, let's get to what we saw on the week, which is Bitcoin closed last week above its short-term holder cost basis. That was 78.9K. First of all, that's pretty significant, right? At least we've seen that before in the previous cycles in 2018 and 2022, and we can compare it. But can you refresh us actually on what the short-term holder cost basis is? So when we say short-term holder, what are we talking about? Are we talking about the cohort of new money, kind of, top buyers, for lack of a better term?
So little different from some of the other market structure data that we look at. So short-term holder cost basis, this is measuring what we think is a proxy for the cost basis of all coins that have been purchased within the last 155 days. So
I see. So it's not the cohorts that we were doing in the previous 2 TDR reports.
Yeah. This is constantly being updated as people, are buying at different levels. And so when we started the bear market, the short-term holder cost basis was closer to like 90K or so. So that's come down as prices have come down. And it tends to serve as upward resistance in bear markets, because this is kind of like the more, trader type of crowd, people that are in and out of the markets. And when you have a, 30+% rally, as we've recently had, you can start to see, sellers starting to come back into the market as this happens. And this is kind of where we're at right now in terms of this move that we've had. We're now pushing up against some of these resistance levels and trying to understand, is this going to break down from here? Is there momentum? Is there, what do we see behind this move? Or are we seeing actually sellers starting to step in where it potentially starts to go in the other direction? So
okay, so we're just a hair above that number. So the short-term holder cost basis is 78.9K at the time of recording. Bitcoin price is 79K and some change. Can we compare this to previous cycles? So you've charted this out. We closed last week above short-term holder cost basis of that 78.9K. This has also happened in previous cycles. Take us back to 2018, the times we closed above short-term holder cost basis. What did that look like?
Yep, and this is the second time it's happened. We also had a weekly close above it back in January. So this is the second time. This, looking back at the 2018 cycle, it looks very similar. So we've been saying that 2026 looks kind of like 2022, but for this KPI, it actually looks much more like 2018. And we can see we rallied, we had a big sell-off back in 2018 early in the bear market, and then a sharp V-shaped rebound. And less than 3 months into the bear market, we did, move above, and we had weekly closes above that short-term holder cost basis. And then we broke down, right? So that served as resistance at that time. We broke down further, and then we kind of bounced around for a little while and then made another move later in the cycle. So at a very similar point in the bear market that we're at today. This was about 220 days into the bear market. We then had another weekly close above the short-term holder cost basis. I think at that time, very similar to the setup today. You've had some digestion in the market. We've had some chop. We've come down, and I think at that time you could have sort of been looking at it and saying, "Wait a minute, maybe we're going into a new regime here, and we're going to actually flip this into support." That did not happen. We ended up breaking down, and then it took another 248 days of sort of wealth destruction, coins rotating, more chop to actually get to that spot where we actually durably broke out from that resistance at the short-term holder cost basis. So that's one example, right? We don't have a ton of history on Bitcoin generally, but we have a couple different cycles that we can look at.
So in 2018, it was third time's the charm, and it was the third time we broke above the short-term holder cost basis that you broke back into a bull market, but that happened 468 days after the cycle peak. And of course, right, we're 217 days in. But the other two times this happened in 2018, it was 79 days in, and then again, 220 days in. The symmetry here is just pretty astounding, because that's almost exactly what's happening this cycle, right? To a day. I mean, rather than 220 days, we're 217. You may as well call that exactly the same.
Very similar place in the bear market. And yeah, when you think about what's going on here and why is that serving as resistance, I think in both cases, and typically what happens is you have a rally back to that spot. So you come down and then you have a move up to that. Mostly short-term holders are buying into that move up. Once you get to that level, a lot of these are traders that are just taking profits and then waiting for the next move down. So the market structure shifts once you've had the move. And then the question is, are there long-term holders, right? The like kind of smart money, the longer-term players that want to get into big positions when they think we're in fair value territory. Like when we meet that point, like, is there enough, if the short-term holders are exiting, are there enough long-term holders, smart money that wants to come in? I think that's the big question. Are they going to deploy at 80K, or are they going to try to wait for like 60K or something more? And it's
the story is all about how the coins change hands and to whom, isn't it? How about let's compare it to 2022. How does it look in comparison to that? What happened with the short-term holder cost basis in 2022?
Yeah, so similar price action. So we did have a weekly close above it. This was a little bit longer into the bear market compared to 2018. So about 144 days in. This was like when we had the rally up at the end of March of 2022. This was after the war in Ukraine had started. Weekly close up there. At the time, the sentiment in the market was shifting towards, this war is good for Bitcoin, right? People at the time, people were using Bitcoin in Ukraine to get around sanctions and different things. So there was like a narrative that
sounds
started
familiar.
to form. Right. And that did not hold, and we had a few more legs to drop, and we actually retested it just before the FTX episode in November of 2022, and then came down again, and ultimately it took about 430 days. So over a year, in the last two bear markets, for us to actually durably break through that level. And then it was clear that we had bottomed, once that had durably broke.
So this breaking above short-term holder cost basis in 2026, is it safe to say that it just feels a little too early to you? I mean, I guess you have some other data to talk about current market structure, but it would be early given how it's played out in the other two cycles.
I think so. I think that's what I kind of keep coming back to. It doesn't have to, right? Just because these things happened in the past, it doesn't mean that, that has to happen. And we know that Bitcoin's market structure is evolving as it becomes a more mature asset. There's new buyers, there's ETFs, there's financialization. So everything is changing here. But the key question for me is like, have enough coins changed hands? I really think that's what it comes down to. And I think when you get to this stage of the bear market, that is like the key thing is like, has enough time sort of played out here for us to sort of like recycle the coins, get them into strong hands, and then, maybe there's a new narrative or conditions change. Right now, you have some macro stuff, which we can get into, that may be a little bit of a headwind as well. Maybe that starts to clear. So yeah, I think we're at a stage where it's really all about time and then just paying attention to how coins are changing as time goes on.
But this is a critical inflection point because in the 2022 cycle, one of those times we crossed the short-term holder cost basis. We actually sustained that. Yep. And that led to the end of the bear market into the next bull market rally. And it also marked the end in 2018. Now that was longer out, 468 days, but that marked the end. And so we have already locked in one weekly close above short-term holder cost basis, about 79K. Yep. What if we lock in a second? Yeah. Say this week we lock in another, and then what if we lock in a third or even a fourth?
Right.
Would that change your mind here? Would that be confirmation that something new is happening and the regime may have changed?
I think so. So I think this is like, we're at I keep calling it an inflection point because this is really the time to be watching this price action to me. And if we can hold these levels and it starts to become clear that like there are buyers at these levels and long-term holders want to buy at 80K, that shifts the narrative. And we know that like, we focus on data to really understand what's going on out here, but we always have to like factor in that price can lead fundamentals, right? So if we're looking at this, we're saying, well, we're not seeing a ton of activity, spot volume. We're going to go through some of this, but there can always be just a mechanical shift or, a narrative or whatever hits, price goes, and then the fundamentals come after. So it's definitely a possibility and something I'm factoring in, but it would be a deviation from what we've seen in the past if we had multiple weekly closes. And that's something to watch for.
Let's go back to this cohort analysis that we've been looking at in the previous couple of weeks, because this was an interesting data point here. You said last week we saw a significant bump in this cohort, the 78 to 92K range cohort. That's everyone who purchased between 78K Bitcoin and 92K Bitcoin. Over the last week, they added 175,000 Bitcoin. Again, these cohorts is where you can see kind of coins moving from hand to hand in the different types of holders that are represented here. That the cohort that declined the most over the last week, though, was the 66 to 78K cohort. They actually are down 133,000 coins. So that cohort, the 66 to 78K, like older hands, let's say, slightly older hands, they sold. And they sold that into the newer hands cohort, of 78K to 92K who were buying. So it looks like investors holding in the 66 to 78K cohort, they took this rally as an opportunity, you say, to sell and to raise cash. And that's curious. Who's the smart money here? Which cohort?
Right. Well, I think that's the question. We don't know for sure, and we're looking at a lot of this data and trying to paint a picture of what we think's happening. And yes, so that what you just went through there is kind of the mechanics of what happened. So it makes sense, right? Price moved into those levels where the 78 to 92 cohort is going to pick up new coins. But what was interesting is we saw a drop in the 66 to 78K cohort, which has been the cohort that's been picking up the most coins. So, trying to understand who is the seller, what we are looking at here is the realized profit by age. So this is just looking at the holders that have been holding Bitcoin in their wallets for 2 to 3 years. And this is where we saw the spike. We were looking at all the different cohorts, trying to understand, where is this coming from? This is really the only one that we saw this, significant spike on. Anyone who's holding Bitcoin for 2 to 3 years, their purchase price is between 27K and 72K or so. And so it does look to me like that's the cohort that's maybe they didn't sell the top, and they bought a few years ago, they waited too long, they didn't sell the top. Maybe they missed the rally in January and they're getting anxious. And now that we go back up to 80K, they want to take some profits. So it kind of looks like to me like that may be what's playing out. And this is typical, right? Like there are people in the market that want to buy dips, but there are also people that have lost conviction, that bought at higher levels or bought a few years ago and they lost their gains and they just want to break even. And this is part of the reason why we always come back to like coins need to change hands. Coins still need to change hands. So it's just interesting. This is the first time we've seen, some some sellers, stepping into the market.
Is it the case that the older money, the 2 to 3 year money, let's say, is smarter money than the younger money, the 1 year type money? Is that usually how the hands work here?
I think so. I think generally speaking, like I always tell people, like if they're interested in Bitcoin, go buy a little and then study it and then learn about it, and like you'll usually develop more conviction, and that that tends to the longer period that you've had, you've probably been more interested, you've probably been more intellectually curious, and you tend to be a little bit more smart money. It's possible that some of these people that were selling, they think we're going lower, and so they're just raising some cash to go lower. Maybe they've lost confidence. Unclear, but we just know that once we got to that 80K level, we started to see some more sellers in the market. So
now the realized profit to loss ratio poked its head above 0% for the first time this bear market. So that has also happened. I don't know if this happened in 2022. Maybe you tell me. Did it happen at all in previous cycles? And what does this tell us?
So yeah, this is also like something to keep an eye on, similar to a short-term holder, cost basis. We in 2022 we did, we came up early in the cycle, but then we never came up until basically the new bull market had started. But we did have the same setup here back in 2018. So again, very close to where we're at today. So 217 days into it, we've seen this turn green. And it was about 229 days back in 2018.
Now, in 2018, it looks like it's very tiny on the chart here, but it looks like it just stayed green for a very brief amount of time, maybe a couple of weeks, and then it dipped back down.
Yeah, same as what we're seeing, is barely poking up today. So again, we're just at these like critical levels here, and it just comes down to like, are there more sellers and buyers at these specific levels?
Well, let's see if we see any signs of life in the market conditions, funding rates, perps volumes, spot volumes, ETF flows, stablecoin supply. Are we seeing signs of life here?
Yeah. So, we've been kind of just updating people weekly on just current conditions because we're at this inflection point and nothing has really changed. So the derivatives market, short-term, traders are still expecting weakness. It's come off a little bit. So the funding rates, in terms of how negative the funding rates are, have come down a little bit. but still negative. So not a huge shift there. We've been talking about spot volumes and how spot volumes are very low right now.
I mean, low. This looks anemic to me.
Yeah.
This is historically low.
Very low. Like you can go back to all the way to like 2019 to see those types of volumes. And this is Bitcoin, not in dollars. So it's Bitcoin. Yeah, I mean, that is interesting. It doesn't necessarily mean that it's super bearish, but what you do tend to see is like volatility increases when prices either go up or down. We've been rising and we haven't seen, a shift in volume. So it just kind of tells me like it's bear market vibes, right? It's what you would typically see in a bear market.
It's kind of apathy volumes. It's certainly not animal spirits.
Yeah. And it tells you like, okay, price is moving up, but it sort of looks like there's just not a lot of contention at these price levels. Like there's not a lot of people that want to sell. There's also not a ton of people that want to buy. If you're in that type of market structure, we've been talking about how there's been a lot of shorts on. You can have these sort of odd, mechanical moves just because shorts are being liquidated and stuff. So I think that has played a role in this rally that we've seen. The other thing we've been looking at is just perps volume, right? Perps volumes are 5 times the amount of volume that we see in the spot market. So traders just prefer perps over spot these days, and there's been quite a bit of attention on the perps market, what's happening in hyperliquid, but we're still seeing bear market conditions even within the perps market. This chart here is showing the centralized and decentralized volumes. We're down 50% or so from the peaks right now, and the volumes are back to kind of where we were in Q2 of 2024. So not seeing like a kind of risk on shift in the market just yet.
Yeah, and certainly not in the spot volumes. That's almost the most damning chart in here. ETF flows holding in there. Stablecoin supply looks pretty much flat since October, but up a slight amount.
A little bit. Yep.
Yeah. So, and then RSI, this is interesting. Bitcoin typically mean reverts after hitting overbought levels. We are in overbought levels on the RSI, which means even in the short run, we're probably looking at some mean reversion. And if that happens, then we're not going to stay above the magic 79K number and stay above short-term cost basis on the weekly close here, right?
Yeah, and this is a big thing to pay attention to. You do typically have a mean reversion. If we did spike up again from here, that would be interesting. It has happened before, but that usually comes like in a real extreme bullish conditions. So when you get to these key resistance levels and the momentum is indicating that you're kind of overbought, this is a tough thing to kind of overcome in the short term, I think.
I guess that's where you're getting the justification of today's report title, which is momentum is waning. Here's how you describe it as you close today's report out. It is our view that the recent 3-month rally was driven by a combination of long-term holders buying fair value in early February. You were buying some fair value in early February, I think, Mike. Strategy purchasing 7.5 billion of Bitcoin. That's bound to do something. The lack of significant outflows from ETFs and just the mechanics of the derivatives markets. I think you mean short squeeze there.
Yep.
But that's what it was. This wasn't a regime change, in your opinion, in the market. At least you're not seeing it in the on-chain data.
That's my assessment of kind of where we're at. And this is the moment of truth. Like Bitcoin, I just think we're at that stage here where this is the moment of truth. There's some macro headwinds that are starting to form out there. I think this is also a challenge given kind of where we're at. And we've had this pretty big move here. We had the CPI data came out yesterday and 3.8% on the CPI. We had PPI today. That was even worse. That was 6%.
It was brutal.
Yeah.
6% PPI?
6% PPI was expected.
That's
4.8.
producer inflation, right? So it's another measure of inflation, but...
Yeah, it's producer, which I think is actually more concerning because this means that the inputs of basically what producers are putting out and selling to consumers, those prices are going higher. For this reason, PPI tends to lead CPI, right? This is the producers. And so if producers are paying more for the inputs, and the reason it tends to lead CPI is because then they have to raise their prices, and then that's where the consumers get hit.
So CPI, we're 3.8 and heading higher then if PPI numbers are correct.
It looks like we could be in that type of setup. The labor market has been, we think it's kind of weak, but the last few labor reports were solid.
Like, you think it's weak, but like last week the numbers were great, right?
Numbers were good, which, if you're trying to get rate cuts, that's not a good thing, because now the Fed has to focus on inflation. So, we've been, some of these parallels are going back to 2018 and some of the data we were looking at today. But if the Fed has to hike rates, which, I don't think that's in the cards like in the near term, but if this continues, then it certainly could be an outcome. And then now you're in a 2022 like situation where the economy's running too hot. They have to hike. And that's,
Trump does not want to hike. Warsh and Trump do not want to hike.
Yeah,
I don't think that's what he's excited about from his new Fed chair.
I don't think the equity markets want that. I don't think anybody wants that, but it looks like we could potentially be heading for that type of outcome. We'll see. But these are just some of the headwinds in front of us, and we know Bitcoin is sort of stretched at the end of this move. So it'll be interesting to see kind of where things shake out.
So those
here
would be some coin changing hands catalysts on the downside. I almost feel like we should change this podcast title to the Coins Changing Hand podcast. We talked about that so many times.
Yeah.
There could be some upside though ahead, right? Strategy might still have some ability to deploy in these markets. A deal in Iran is always somewhere over the horizon. We just don't know how far.
Yep.
We have the Clarity Bill, the Clarity Act. I mean, ask me on a given day whether that thing's going to pass or not. Yeah. It's been fluctuating from about 50% odds to about 70% odds, but that could be a catalyst to the short run. So there are some things that could change hands in the other direction, right?
Yes. Yeah. I think if you're bullish, that's probably, the things that you can look to. And like I said, if there is some, like, there's a lot going on here, right? If there's an end to the war, or if there's if the Strait of Hormuz is opened, if Clarity, passes, or Saylor tweets that he bought 10 billion of Bitcoin, like these things can happen. And then the price just, takes off. And then in some of these reports we'll be saying, well, look at this, the price took off. Now look at the fundamentals are coming behind it. And then that to me is like what you're looking for to say, okay, we're off to the races again here.
Now, unfortunately, you got some bad news about June at the end of the report. So what has historically been in store for Bitcoin in the month of June?
June is historically a rough month, and anybody who was around in 2022 will remember, this is when, ETH fell rapidly all the way down to 900 or so. Historically, not a great month. It's actually, if you just look at bear market years, it's the worst month. So average returns over the last 3 bear markets are negative 20%.
Yikes!
In June. So, and when you see that,
do you want to go
weird.
On vacation? let's take June off then. Like, come back in July.
Time to go to the beach, I think. It just fascinates me sometimes how the conditions in the market tend to line up with like these types of things where we know we're going into a weak month. Bitcoin has rallied, but now we're hitting these resistance levels, and the macro is starting to get right. There's been like a lot of like kind of bullish tailwinds, and this is kind of why I believe the momentum is waning a little bit here. The marginal buyer maybe is not as interested at 80K. So very interesting, time here in the markets. And we just did a sale for the DeFi Report annual plan, 20% off, because I want people to be able to access some of this. I think it's a really important time to be paying attention. So people can sign up and get 20% off. If you're on the monthly plan, we made it super easy to switch over.
I hope you guys heard that, okay? It's time to lock in, and what you want to do is not just lock in for a month. You want to lock in for the next 12 months. And Mike is running a plan right now, 20% off sale if you lock in TDR Pro annually. So that comes to $16 per month. That is cheaper than a Netflix subscription for all of the intel that Mike provides. A fantastic deal. There's a link in the show notes for that. And give us, as we close here, Mike, some of the key levels that you end today's note with. So this is Bitcoin price, 79K, 82.7K, and 85K. These are 3 different price levels that you are watching. Why for each of them?
Yeah. So 79K short-term holder cost basis. We had that important weekly close last week. So Sunday, 8 o'clock, we'll be looking to see if we're going to get another, 2 in a week. Weekly closes above that level. That would be a deviation from what we've seen in past bear markets. We've talked about the 200-day moving average. That's at 82.7K. And, historically, we have not been able to breach the 200-day and hold that, at this stage of a bear market. The one time we did was in 2014, and that did not hold. So that's a very key level. And we actually did get to we kind of bumped into it. I think last week we got up to 82.7. That was the high of this rally. So we've touched it. And then 85K, we've talked about how there were a lot of dip buyers early in the bear market when Bitcoin had kind of come down into this range after this was in the kind of December, January period. A lot of people who thought we were still in the bull market were rushing in to buy that dip. So there's quite a bit of supply at the 85K. That's also the active realized price. So realized price is a proxy for all of the coins in the market. That price is around 55, 56K. But if we just look at, that's including old dormant coins, Satoshi's coins, all of that. But if we only look at the kind of cost basis of active coins, that's about 85K. So that's another important level to keep an eye on here. But battle between buyers and sellers at this level, this is a level to watch. And we've part of if we go back to February and kind of what we were saying back then, I was more convicted that Bitcoin we were so early in the bear market, we'd already come down to these fair levels that that the probabilities were pointing to deep value opportunities. And what this, rally has sort of done to shift my thinking a little bit is that we may not breach those levels. I'm expecting some weakness and I'm expecting some chop. But what will be interesting is to see if this volatility comes again, is it the nasty volatility that we saw in February where it's sort of a rapid decline, or is it kind of just choppy, volatility? And if that goes on for a month and you're kind of bouncing around the 70s or so, upper 60s, I think you can start to potentially make a stronger case that maybe we did bottom, in February and we're just going to bounce around for a bit. So definitely a good time to be paying attention.
It's a good time to be paying attention. It's a good time to lock in. Actually, don't go on vacation in June because Bitcoin could be on sale in June. And certainly TDR Pro is on sale right now.
Yes.
Okay, you guys can lock in for a year for $16. Fantastic value. Mike, I've been a subscriber from day one. I pay for this. I don't get it for free. And it's just incredible value. In fact, there were 2 TDR alerts in the last week of portfolio changes. So Mike has made some interesting moves in his portfolio. I won't reveal the details, but there was a buy. And then earlier this week, there was a sell. So there's a little bit of active trading going on here and some really interesting moves. So if you want to uncover what that looks like, you get access to Mike's portfolio as well when you become a TDR member. That would be the action item for today's episode. Also, have to let you know as we close this out, you guys know none of this has been financial advice. It never is. This is an investor journal, and we're on the journey right alongside you. So until next time, stay curious.